Okay, good afternoon. Am I audible? Rashmi, Vishakha, am I audible?
Yes, sir.
Thank you.
Good afternoon, sir.
Good afternoon. Okay. Okay, around four people have joined, so we'll wait for some time and then we'll continue. Guys, hopefully, I guess your classes would be starting from 17. They are planning to start the classes from 17, the physical classes. Okay, the official notification has not yet come as to who is supposed to attend and whether hostel facility or bus facility would be available. We are not clear about it, but that is what we have come to know, that your classes might start, the actual physical classes might start from 17th, that is immediately after Diwali. Okay, can I have you all on in the video mode, please? Rashmi, Tejaswini, Pradeep, Vishakha. Okay, so just be prepared. Now we'll be sending you an official notification as soon as we get it from the college. Okay, as to whether the classes are really starting, but they are planning for it. So maybe by tomorrow we'll get something in return. Okay, because I guess from Saturday and Monday would be a holiday, and if they are planning 17, then Tuesday immediately we'll be starting with the classes itself. Okay, so it would be a flipped class, no doubt. Okay, it may be online offline together. Okay, so let's see how it works out. Okay, but mentally be prepared. If the class are starting, then you have to give most of your give away most of your habits that you have cultivated for these so many months. Okay, and you have to come to the college. Okay, maybe a consent will be sent. You have to sign those. Your parents have to give a consent that yeah, they are ready to send their children to the college and all those things. Okay, so I'm just giving you an idea about it so that you are mentally prepared. Okay, we are not sure, it may not happen, it may happen also. Okay, there are more chances that it will happen, but there are chances that it may not happen also. But you should not get a shock on tomorrow evening. Suddenly you should not get a shock. After Diwali you have to come to the college. Okay, most people, yeah, some of the people would love to come back because they are already bored in the at home, but there are some who are enjoying it and don't want to come to the college at all. Okay. Why the students are less in number, like it's almost 10 minutes and only we have six people, seven people. Any idea? Was this strength same for the previous classes, Rashmi?
So we didn't have any class in the morning. Like Badgi sir's class we had, sir. Strength was there, sir.
Okay, fine. I guess 20 of them were there in the previous class, right?
Yes, sir.
Okay, okay, we'll wait for some time because honestly, if I start only for five people, it doesn't make any sense. Okay, so we'll wait for some time and then we'll start with the PPT or with the class. Sorry. Pradeep, have you applied for Berger Paints? Pradeep,
Yes, sir.
you have applied. Have you received any communication from them?
Sir, they mailed it that I have not been shortlisted.
Okay. Why your percentage is low?
Yes, sir.
Okay, okay. Is there anyone from your class who has got a positive reply? Rashmi,
So I have the list of the shortlisted students.
can you share it with me?
Nabi, yes, sir.
Yeah, yeah.
Nabiraj, Sanjay, and Akash are shortlisted.
Only three.
Yes, sir.
Out of them, Akash is already placed. So Sanjay and Abhiraj. Sanjay,
Yes, sir.
Sanjay, you're there? Sanjay, can you hear
Yes,
me?
sir.
Sanjay, yeah. What is the communication that you've got from Berger Paints?
So my network is not properly.
Sanjay, you're not audible.
Sir. Yeah.
Have you received any communication from Berger Paints?
Yes, sir. I
What
will
exactly?
attend the exam also, sir.
You should tell us, guys.
Aptitude test. I will. Yes, sir. I will attend aptitude test, sir.
You have
Yesterday.
attended aptitude test. Okay. Rashmi,
No,
can
sir.
you come? Where is Rashmi? Rashmi or Narayan, if he's there. Narayan, are you there? Or Meghna? Any one of these three? Narayan, can you hear me?
Yes, sir. Yes, sir.
Narayan, please come in the video mode, please.
Wait a minute, sir.
Okay. Narayan, any problem?
Yes, sir. I was slept off. I was sick, sir. Wait, sir. Give me a minute. Just give me a minute.
No, it's okay. Do not turn on your video. You can just speak to me, Narayan. Okay. Nabiraj is there?
Hello, sir.
Nabiraj? Yeah, Narayan.
No, sir. Yes, sir.
Narayan, you one thing next time whenever there is any drive which is happening, you need to be updated about what is happening because I guess Berger Paints, there are three students who are shortlisted and out of them they have also given the aptitude test. We are not aware of it.
Yes, sir.
Okay, did you knew about it?
I knew that they have gone for aptitudes test, sir, but I did not know that they have shortlisted, sir.
Okay, please keep us updated because see, whenever the company in such cases, the company directly communicates with the students. Okay, and they don't keep the placement cell in the loop. Fine. So unless you all tell me, ki, sir, I have been called for an aptitude test or I have been called for an interview or a GD, we will not come to know about it. Okay, Akash, in case of HFFC, it was routed through the placement cell. So every information used to go from the placement cell. In case of Berger Paints, it is directly going to the students. So Narayan, please keep me updated about what is happening next
Okay, sir.
henceforth.
Sorry, sir.
Okay. Yeah. So just
Sir,
try. Yeah, Rashmi.
sir, Rashmi, yes, sir, you were saying something.
Yeah, I was saying that this about Berger Paints. I guess
I
Sanjay,
just lost connect.
Abhiraj, and Akash have given the aptitude test.
Sir, for Berger,
Yeah, for Berger Paints. Okay, but the we were not aware of it. So next time, please be in touch with the students. Okay, and you have to keep us updated because now the company is communicating with the student itself directly. They are not keeping the placement cell in the loop. So we,
Yes, sir.
unless you all, and it's not, there is no physical classes, so we'll not meet you also. So unless you all inform us saying that, sir, these many students are shortlisted, these many students have gone for the aptitude, etc., will not come to know. Okay,
Yes,
so
sir.
Rashmi, Narayan, and Meghna, I guess Meghna is not there, but please tell her also, like, you have to be in constant touch with the students and you have to keep us updated. Okay.
Okay,
Yes,
sir.
sir.
Okay. Yeah. So Sanjay, you can, Narayan and Rashmi, you can just talk to Sanjay, Naviraj, and Akash about what happened, and you can just update me on the same.
Yes, sir.
Okay. Thank you.
Thank you, sir.
Yeah. Okay. So I guess 20 people have 19 people have joined. So I'll start with the class. Okay. Just confirm if you can see the screen. Is the screen? Sorry, which screen did I start? Okay. Is the screen visible? Yeah. Thank you. Okay. So in the previous class, if you remember, we had started with this microfinance models. Like microfinance is giving small loans to small and marginal people, poor people, basically. Now, uh, this can be done in various ways. Okay, there are various ways that you can follow to provide finance to small people, small loans to small people. Now, what are those various ways? We call them as models. Okay, so we started with community banking, where a particular community comes to people from a particular community comes together and they start saving money and then giving loans to people, preferably of the same community, so that the community grows. Okay, cooperatives is basically people come as a cooperative societies, small cooperative societies. They come together, they form a cooperative society, and then encourage savings from all parts of the villages, and then they start lending money or giving loans to people in and around, or to the members of the society. Okay, then a group is basically a group of people, maybe 15, 20 people come together. Okay, they contribute themselves, and the money that has been contributed is circulated amongst those group of people itself as loan, and it is the guarantee, it is the responsibility of the other members of the group to ensure that the loan is repaid by the borrower. Okay, then Gramin is basically again a group of, this is a institution which covers around 15 to 20 villages. Okay, rural areas, and they it's like a bank. Okay, like we took an example of Karnataka Vikas Gramin Bank, KVG. Okay, so something like that. An association is created, and then they give loans to the people. Okay, so uh, okay, so this is how the village, sorry, Gramin banking is done. Village banking, again, a part of the similar to Gramin, but here what happens is uh, a particular set of people, like who are self-employed, maybe like self-employed, they come together. Again, the same process continues. They contribute money, and then the same has been distributed. Excuse me. Okay, same has been distributed amongst the people in the village. Okay, for employment purpose. Okay, that is what it does. Associations is your trade associations or your trade unions, etc. These people come together. Okay, they form an association here. A group of people come together and they form an association, and through that association they encourage savings from the people, investments from the people, and then the same amount which has been collected is given to the people at a in the form of small loans at lower interest rate compared to the money lenders. Okay, then bank guarantees is basically here, it is the bank which is guaranteeing you, or the government organizations which are guaranteeing you for the loans, and you get a loan as per the guarantees provided by the people. Okay, maybe internal people or external parties like government associations or societies, they also guarantee your loan. Okay, so that is what bank guarantees are. Then credit unions, mostly similar to associations here, like a trade union, let's say uh, your labor union. Okay, the labor union come together, they form a labor union, and then they collect funds the distribute funds among the same members of the labor union in the form of loans, etc. Okay, individual is basically here straight loans are given to one single person. Okay, so it is directly from one person to another person, giving small loans from one person to another person. Okay, that is what individual talks about. Then intermediaries, basically there are some parties which play an important role of an intermediary between the lender and the borrower. Okay, so they are also called as go between organizations. Okay, they are called as go between organizations. Normally these are NGOs or social service associations who play a role as an intermediaries in helping the lender to give loans to the needy borrowers. Okay, so that is what intermediaries are. Then NGOs, sometimes the non-government organizations, are also into funding or providing loans to small and marginal people. Okay, so NGOs also, so it can be the microfinance can be done through an NGO model, where there is a non-government organization which is started and they start providing loans, small loans to people who need that. Okay, so that is through NGO. Then next one is peer pressure. Peer pressure is basically a moral obligation created. uh, Basically what happens here is, okay, um, let's say there are a group of friends who uh, a group of friends who start contributing, and the money goes to one person as loan. Okay, so since they are group of friends together, they have started. Okay, the repayment of loan is done because of peer pressure. Okay, the other members who have given the loan to one particular member, let's say A has taken a loan, so B, C, D, E will have the moral obligation to pursue that A to repay the loan. That is called as peer pressure. So A is under the pressure of those peers from whom he has taken loan, and it is his responsibility to pay it back. That is what peer pressure is. Okay, then rotating savings and credit associations. Okay, uh, basically again there are a group of people who join together and make periodic cyclic contribution to common fund. Okay, and that fund is given to one person. Okay, then once he repays the loan, the loan amount goes to the second person. When he repays, it goes to the third person, so it goes as a cycle. Okay, it is a cyclic payment. So that is what rotating savings is. Everybody contributes money, but the money goes to one person. Once he repays, the same money goes to the second one. He repays, the money goes to the third one. So this cycle goes on continuing. So that is called as rotating savings or credit. Sorry, rotating savings or credit associations. Okay, so that is what is another model of microfinance. And the last one is small business enterprises. Okay, that is your SME. So they get loans from microcredit programs, and the SMEs also need money. They need smaller loans, or let's say smaller amount of loans to meet their working capital requirements. Okay, so they also go for microfinance institutions instead of going for a nationalized banks or a financial institutions or bigger financial institution. They may go for a microfinance institution to take a loan. Okay, because the procedure is less, because small enterprises do not have huge asset base to give it as a collateral and get a loan. So in such cases the microfinance institutions come for their help and provide their loans without any collateral securities. So that is the another model through which microfinancing is done. That is the SME model, small business enterprises, or uh, small micro enterprises, SBE or SME you can call it as. Okay, so these are the various models. Though every model, if you see, there are many common features like contribution by the members and giving it to the members or giving it to others. The most of the concepts are same, but everywhere they follow different models which are listed here. Okay, starting from community banking to village banking to intermediaries to small business enterprises. Are you clear with all these? If there are any doubts in any of these models, feel free to ask. If you're clear, give a thumbs up so that I can go ahead with the next part. Is everybody clear? If it is clear, please give a thumbs up, guys, so that I can go ahead. Okay, fine, fair enough. Okay, let's move on to the next part. That is microfinance services and products. Now, what are the various products or services that these microfinance institutions provide? Okay, first one is microcredit. We have discussed a lot about microcredit. Microcredit is nothing but small loans, okay, giving very small loans to the needy people. That is what microcredit is. So that is one of the product that is available with microfinance institution. Most important thing is there is no collateral securities that you need to provide. Okay, it is purely on the basis of personal guarantee given by the members or given by the people in the village, etc. Okay, so that is what microcredit talks about. Micro savings is you have the microfinance institutions have schemes of uh, small savings. Okay, like you can save a very small amount. Okay, not like thousands and lakhs of rupees, but you can save smaller amounts of hundreds and 500s, etc. Okay, so that is how you encourage people to save money. Okay, small bit of money they keep on saving. Okay, that is how microfinance institution encourages the poor people in savings, okay, through micro saving plans. Okay, smaller plans for saving money. Okay, smaller amount of uh, amount of installments, maybe we can say, or deposits that they can do, and they can save money. Okay, next one is micro insurance. Okay, now here micro insurance is basically you get yourself insured at a very small premium. A very the premium is negligible, and insurance amount also is not so high. Okay, the insurance amount that is paid, or the amount you're insured for, okay, is also a small amount as compared to the other insurance products that are available. Like you pay 30,000, you're insured for a crore of rupees. That doesn't happen in micro insurance. In micro insurance it is at a very small scale. Like the insurance premiums are also very small, as well as the amount you're insured for, okay, is also a smaller amount. So that is what micro insurance is. Okay, micro leasing means, okay, you're leasing your property, maybe movable or immovable property, on a small property. Okay, a small machine, a small vehicle, or a small property. It may be a small piece of land that you're leasing. Okay, so that is also done through microfinance institutions. Okay, they are involved into, like, excuse me, there are lots of small equipments which are required by farmers. There are or self-employed individuals or artisans. There are very small type of machines that they require. Okay, so the microfinance institution will give those machines on lease. Okay, and once the payment is done, maybe the machine is transferred to the borrower or the lessee, and or sometimes it is taken back by the lessor, depends on the what kind of contract you have entered into. Okay, but again, as I said, it is at a very small level. You don't lease out huge piece of land or huge machinery, etc. It's smaller in size. Okay, for example, in last class, if you remember, we spoke about Padman. Okay, in that machine, a very small machine, right, are hardly costing 20,000 rupees. Okay, now what was shown in that particular in that particular movie is, again, the bank will provide the machine, provide loan for the machine. So initially it is on lease, and once the installments are paid, once all the installments are paid along with the interest, then the ownership of the machine is transferred to that self-help group, or the association of the women who had taken a loan. So that is what uh, micro leasing is all about. Okay, and next one is money transfer. Now money transfer is transferring from one account to another account. Okay, maybe within the country or outside the country, but again on a very small scale. So that facility is also provided by microfinance institutions. So it's not only providing loans and taking savings from the people, but it also is useful in money transfer. Okay, so microfinance institutions are involved into money transfer. Okay, like we have the Western Union money transfer. Okay, so money then Western Union MoneyGram, that is for only rural people, where smaller amounts of money can be transferred outside the country. Okay, so this is how these are the various services that are provided by microfinance institutions, starting from giving credits to encouraging savings in small amounts, providing insurance, then leasing services, small leasing services, and also money transfer. Okay, so are you clear with this particular part? Are you clear with various services that are provided by microfinance institutions? Any doubts over here?
Sir,
Yes.
sir, in like villages and all, they'll be having like bachat guards and all. So
Correct,
it will
correct.
come in mic.
Yeah, bachat guts are self-help groups. We call them as self-help groups.
Yes,
Okay,
sir.
so it's again a model of microfinancing.
Okay.
Okay, in the previous slide, if you remember, see, so bachat group can be the third one, that is group. Okay, it can be
Okay.
association, but normally it's not an association. They are not registered and all, but it's a normal group of people who come together. Okay, or it may be a peer pressure, it may be individual. Okay,
Yes, sir.
so bachat group, yes, bachat gut is also a part of microfinance model. Okay, it is a type of model which provides micro level financing to the needy people. Definitely, yes. And yeah, anything else from this? Okay, should I continue with the next part? Okay, the next part is microfinance delivery mechanism. Okay, now basically microfinance is again part of RBI. So it's a part of the banking system in the country. So how does the delivery happens? How does the how does RBI ensures that it reaches the people who require it? Okay, so first one is through SHG, that is self-help group bank linkage programs. Okay, so here what has happened is, okay, this self-help group is a small group of people of around 15 to 20 members who voluntarily formed um, who have voluntarily formed this particular group, and the RBI along with NABARD, okay, that is the National Bank for Agriculture and Rural Development. So RBI along with NABARD make sure that there is a proper relationship between the poor people and the bank. Okay, because they believe in believing in improving the relationship between the poor people and the bank, so that more poor people come to the bank and they get take that advantage of taking loans at a lower interest rate, smaller loans at lower interest rate. So that is what SHG-Bank linkage program is. Okay, that is providing a link between the self-help groups and the banks. Okay, like these self-help groups, as Brunali rightly said, the bachat gut, okay, they save money. Okay, but how are they going to generate income out of it? So what they can do is, they can, whatever money that they have saved, they can put it into the bank in the form of a deposit, and they can earn interest on that. Okay, so that is how the RBI along with NABARD is trying to create a link between the SHG and the banks. Okay, next one is again we talk about the microfinance institution banks linkage program. Okay, so here also the almost the intentions are same, but okay, just give me a minute here. Okay, here there is an important concept that the banks or the microfinance institution lend money in the form of joint liability group. Now what is this joint liability group is? Okay, it's an informal group of around 5 to 10 individual members. Okay, where one person takes a loan, and it is the guarantee of the other members. The guarantee is given by the other members of the group. Okay, so that is how the microfinance institution bank linkage programs are working. Okay, so again, uh, the RBI is trying to create a proper mechanism through which proper loan facilities, proper saving facilities are provided to poor people through microfinance models. Okay, so that is how the delivery system is working. They are trying to work out with the delivery system. So these are the two main delivery systems that are already there existing, and banks are working on these delivery systems. Okay, that is your self-help group, sorry, the self-help group linkage. okay, program, and bank linkage program, and the microfinance institution bank linkage program. Okay, so any doubts in these two programs? Okay, they are just programs. Okay, need not so worried about what it may be and all those things. Okay, they are just programs through which the RBI is trying to reach the poor people. uh, Basically they want monetary benefits to be given to the poor people. Okay, so any doubts over here? Any doubts, guys? if if you're clear, please give a thumbs up so that I can go ahead with the next part. Okay, great. Okay, next one that we are going to talk about is the advantages. Okay, we'll just start with advantages and disadvantages, and we'll stop the class for today. Okay, because in the next class I'll be starting with leasing. Okay, that's a completely different different part. Okay, so what are the advantages of microfinance? First one, financial services to poor people. Yes, the main motto of microfinance institution is they to provide services, financial services to poor people. So that is what they are doing, and that is one advantage that everybody is getting. Okay, development of the economy, definitely, because even the poor people are getting an access to the financial markets. They are able to take loans and basically trying to generate revenues. Okay, they are trying to generate revenues, and when they try to generate revenues for themselves, okay, higher the revenue, definitely there would be development in the economy. Okay, then promote community building and mutual accountability. Yes, community building is, as I said, there are people who come together, people from a particular community who come together, they start saving money, they start giving loans to each other, or people from the same community. So there is community building, people come together, there is a sense of belongingness, and even mutual accountability, because uh, we are from the same community, so we should not cheat each other. That is the sense of responsibility that you have, so that accountability comes. Okay, when you take a loan from some unknown person, there is less accountability, but when you take money from a known person, you are more accountable to it. Okay, so that is what is promote community building and mutual accountability is. Next one is encourage future orientation. Yes, okay, it's basically they are trying to prepare you for the future. Okay, because now initially what used to happen in case of villages or rural areas, the people used to work only for that particular day. Okay, you work, you get money, you spend it on that day, you spend it and finish it that day itself. There was no concept of saving as such. Okay, why do you do saving? Saving is for future. So with the enhancement of microfinance institutions, people have started saving money. That means they are future oriented, they want to save something for the future, maybe for themselves or for their children. Okay, so that is how they are encouraging people, encouraging people in to become more future oriented rather than just uh, be in the present. Okay, so that is what is another advantage of microfinance. And last one is it helps women, because we have seen lots of self-help group where most of the women are participating, and they are contributing, they are saving money, and the money is utilized for productive purposes later. Okay, so it is very beneficial for women, especially in the rural areas, poor women in the rural areas, to do something on their own. Okay, so that is, these are the advantages. Okay, so if you you will try to understand the advantages of microfinance only if you only if you have seen that rural areas, if you have experienced the life in rural areas, if you have experienced the problems in rural areas, then only you will understand why microfinance is so important. Okay, uh, then comes the disadvantages. Yes, there are a bit of disadvantages, no doubt. First one is ignorance towards other areas, like when you start giving more importance to microfinance, other areas like health services, healthcare services, or other community development services, they lag a bit, because you are more concentrating on providing funds Okay, so these areas lag a bit. That is one disadvantage, indirect disadvantage of of promoting more and more microfinance institutions. Okay, not a assured solution of reducing poverty. Okay, it may not happen like you have a microfinance institution so your poverty is eradicated. No, it may not happen. So it is not an assured solution for reducing poverty. Okay, so yes, to some extent it may happen, but it's not 100% assured that yes, you start a microfinance institution and poverty would be eradicated from your village or from the locality from where you are. No, it's not possible, but yes, it gives a bit of solution to eradicate poverty. Okay, then excessive interest rates. Yes, there are some of the there are some microfinance institutions who are charging higher interest rates, okay, just to exploit people. Okay, they are doing that. Okay, so that's a part and parcel of the system. Okay, so that is another disadvantage, because most of the microfinance institutions are not regulated. They don't come under the regulation of the RBI. So when such institutions are there, they tend to charge more interest on the borrowings to generate more revenues to the institution. So that creates a problem in microfinance. So that is another disadvantage. And unauthorized use of funds by the borrowers. Okay, since there is no guarantee given, you have just borrowed money and you can use it anyhow you want. There is no restriction on where to use it. So lots of borrowers use it. There is unauthorized use. Okay, they can use it anywhere they want, so they just spend it. Not for most of them do it for non-productive purposes, and which is not productive at all, and then they fail to prepay the borrowed money. Okay, so that is another issue of unauthorized use of funds. That does not happen in nationalized banks, that does not happen in financial institutions, because when you are taking a loan, you are accountable for each and every withdrawal that you do. Okay, like you are taking a home loan. Let's say they ask for how much construction is completed, they ask for completion certificate, they ask for photographs. They then only they will sanction the next uh, funds or the next stage. Okay, they go on funding you on stage basis, they do not give you the entire money at once. It is a stage loan sanctioning, what they do, the money that they sanction. Okay, but in case of microfinance institutions, there is no such rules and regulations. So money once given, it's not the concern of the microfinance institution as to what the borrower is doing with that money. So there are a lot of cases where the borrowers have not used it in a proper manner. They have used it in unproductive purposes and end up not paying the loan back. Okay, so and most of the microfinance institutions are suffering because of this. Okay, like it's not a successful model, to be very frank. Microfinance institution initially, okay, morally yes, it was a good model, but when it comes to profit, when it comes to economics, okay, it's not a profitable model. Okay, that is what is another disadvantage of a microfinance institution. Okay, so I'm done with this. Then the challenges of these are some challenges, and I'll just brief you out, because most of the things are already discussed. Absence of poor regulations, as I said, they don't come under the direct regulations of RBI, so regulations are less. Weak governance, there are only small group of people who come together and then they start this, so governance as such is not there. Then field supervision is not, there is nothing called as field supervision where you go inspect and then you give a loan. Nothing. Rural penetration is also difficult, because people do not believe in when it comes to money, they don't believe in people, other people. So penetration, going to the last person in the rural area, is really becoming a problem. Less, the range of products is very minimum. They cannot give you more range of products as a bank can give or a financial institution can give. So that is another challenge that they are facing. Transparency of interest rate, yes, that is another issue. There is no transparency in interest rate as we have in banks and financial institutions. The rates are fixed. Here the rates are not fixed, so there is no transparency. Maybe rates may change from person to person also. And operating costs are huge. Okay, because you have to maintain the books, you have to maintain the deposits, you have to maintain the records, everything. So operating cost goes on increasing over there. So that is another challenge that they are facing. Okay, so these are some of the challenges that microfinance institutions are facing. Okay guys, we are left with